Hi, this is Peggy from WAR. So today I am glad to welcome Jan Arp to discuss the new normal in financial services. So Jan is the founding managing partner of the Holt Accelerator based in Montreal, and the accelerator focuses on fintech early stage. So thank you so much, Jan, for being with us today. And let's get going. So first question. What do you think is going to be the lasting impacts of COVID on financial services?
It's a great question. It's a big question, right? So where is this going? Big picture, I think we've seen a world where in past years leading up to this, it was almost like a rising tide floats all boats, right?
Mm-hmm.
So everyone was doing well in this sort of world. As we move forward with the advent of COVID, what we saw was more streams, rapids, right? So for which you can either find that rapid and that wave and ride that stream into bluer oceans, or you're going to hit the rocks and shore up and be in trouble, so to speak. So where do you find those streams on the fintech side? Those are the big questions right now, and we're seeing a lot of them. And the other side, I'm asking this question, I'm very curious where it's going to turn out, is the future of work. For some, it's a little easier if we speak about fintechs, right? Like a transformation of saying, hey, we can have our entire teams digital. We've been doing this already, and it just further gives rationale to why they've been doing this in the first place. So the digital nomad work, although it's not obviously as easy as within financial institutions who really had to learn, some of them were a little easier where their systems were already on the cloud, but others where they still have typical 9-to-5 roles, how do you get them on there? So I do wonder where that's going to land. I think we've moved further that way. I do have some key thematics. I'm happy to share a screen with you if you want to kind of go into some visuals.
By all means, thank you so much.
So we actually did a bit of this, and so through with our advisors, we kind of polled them and said, hey, what are some of the key areas that they think? And by the way, one of our advisors being, of course, you, Peggy. So thank you for filling that in and contributing to this research as we went through it. It's a bit of buzzword bingo. I'll run through some, but I'd also love to hear your side on this. But one of the biggest things we heard when we were doing some of our webinar series around the world, like cashless societies, right, moving forward. I mean, that was such a big, just think of it today. I mean, I went to go pay finally into a store the other day, and most of it was tap, but I still had to use my fingers. I had to, accept, to tap. But I'm like, why am I touching at all? Like, so that's how we're thinking now. So it's going to be driven a little bit by that way. Fraud, any times of crisis, right? There's an increase in the amount of fraud that's occurring right now. And so we're seeing that already. Like, think of the amount of text message you've been receiving to say, hey, did you get your CERB payments right now? Or sign up, click here. Supply chain, right? I've made some orders already trying to support locally, but still stuff stuck at the borders. And so what is it going to look like in the future from geopolitical, from social? We're talking more. I've heard a lot of things out of France and buying more locally and organically and from seed to table, right? How has that changed trade finance and the way that we interact with our societies? And I'd say maybe one last area, but I definitely want to hear yours, is around credit scoring, right? More social inclusion, right? How can we get more people online? If you don't have a credit score, it's hard to participate in this world. So, hopefully we get more support and better systems to help the underbanked.
And I absolutely agree with you. I would say my top three. The first one is financial inclusion.
Yeah.
And the hope is from that crisis, actually some good coming out of that, and financial inclusion is something that's really really important. So hopefully this one's going to be benefiting from the crisis. The second thing that I believe is a change for the best is what you have ESG. I would even push it and call it impact investing. That again, I think we realized during that crisis the importance of fighting climate change, supporting the environment, and diversity, all of that. That is also something that needs to be supported and that fall into this impact. And the third thing, that's going to be what you classified as cybersecurity and RegTech. You mentioned the ID fraud. I absolutely agree with you. Cybersecurity, for multiple reasons, not just the scam, phishing and all of that came during the crisis, but as we're getting more and more digital, you're working from home, I'm working from home. but the compliance people are working from home, the traders are coming. So way more vulnerabilities here in the system. But also as we're increasingly going digital for the clients as well, that's multiple points of breakage that increases the risk. And I know you're a big supporter of open banking. That also opened the box of, okay, what do we do with open banking? It's a bit slow in Canada. I guess that's going to slow this agenda even more with the additional risk of cybersecurity. So a brave new world in front of us. Thank you for sharing. That's a great visual, actually.
My pleasure. Well, thanks for allowing me to share.
No, that's wonderful. So the second question I had for you is linked with regulation and policies. We spoke about, like fraud, and that might be one of the things you see. What are the new regulations you think that will appear in that new world?
Well, I still think we're trying to catch up on adjusting our regulatory environment prior to COVID. So post-COVID, are we going to see an acceleration there? If anything, sort of my concerns is it's caused a bit of a further postponement and delay for areas for which we were starting to fall further behind. So for instance, we all saw from an open banking perspective, now it's a delay in the consultations, which we're already minimum 5 years behind, and we'll continue to fall further behind because we just don't have time to focus on it, which to me is a little bit frustrating. I think we should be investing resources at this time to better understand how to move forward during these times versus completely shifting away from that sort of discussion. And I have concerns over a lot of the things in the areas. For instance, the way that we're distributing. While I do think we've reacted quickly in a big volume sort of way for supporting our economy as a whole, the issue is our understanding of where to focus and prioritize the funding mechanisms, right? So where do we do first? We gave money. We looked at 2008 books. Okay, we think there's going to be a liquidity issue. Let's give a bunch of money to the largest financial institutions to make sure there's enough liquidity in the system. Next, well, we understood there was going to be massive job layoff, so that we should focus on getting payments to our society. Third was the businesses and the small businesses, and trying to figure out, okay, what do we do there? The issue is that was kind of the reverse order in my mind. We should have been focusing on small businesses first. And then the cause was, by the time we figured that out, not all businesses were eligible. And then we found out that this didn't apply to startups. Then we tried to adjust the startup mechanisms with matching funding programs. Again, this doesn't actually fit them. Then we had all these bottlenecks because in Canada, we like to do it through one source, trusted source, where we believe is better able to operate and has a better lower reputational risk, like other nations where they divvied it up to other fintechs. So what it did was it created more efficiencies in the market and enabled other players, because you're now investing in those players. So it's already it's like an extra benefit because more people who are benefiting, prospering in their balance sheet without having to touch that financing mechanisms. And it trickles all the way down to the fintechs. We had fintechs in our portfolios, so we invest early stage, who are able to support and be a part of the PPP lending programs. And this wouldn't happen at all. We can't even provide financing to the largest fintechs here in Canada. So I think we're overlooking some massive opportunities. I think we've been too conservative. And I think and this is on a Canadian front versus an international. There are other economies that are way worse off, in my perspective, where they haven't given any money to stimulate the economy and keep them afloat. So we're going to see some winners and losers through that. But I do think in terms of the efficiencies of it, there's still some more work to do up on the Canadian front.
Yeah, I hear you. It's interesting to see that. I would have thought that we would have planned already in place in case that type of unknown events, namely a pandemic, would happen, versus trying to do everything last minute. And I mean, there is not one country that's better than another, so it's not Canada in particular. It's just that it was very surprising to me that we were learning so much as we went. It becomes a social experiment, but I think a lot of people would have been happy not to have to go through that social experiment or benefit from it, as you mentioned, for some of the fintech. So anyway, long story here.
We agree.
It's, yeah, it's another set of video I should do on that topics actually. So what impacts do you see COVID will have, talking about, the global financial stability, global financial order? We spoke a bit about cybersecurity, the risk, of course, the debt, US, China. What's your thought there?
Yeah, I mean, I'm no economist by trade. I focus more on the fintechs. I mean, and I'll provide some opinions and then bring it back to my comfort zone. I mean, we're hearing things that, for instance, the Canadian economy looking like an 8% drop this year, and then a rebound, ideally of 4% next year. And then so it's going to look at like another 2 to 3 years to sort of rebound from that. But what are we seeing from a fintech side of things, or is that the market as a whole required a little bit of consolidation, so a little bit of a shakeout.
Mm-hmm.
We saw some valuations that were very high, so we're now seeing some downwards pressure on those valuations. So from our perspective, it's been actually, we took that decision up front. We said, yes, we'll continue to support our portfolio companies, but we'll continue to invest in companies during this time. So we launched our next program into this, and we've seen definitely it is a great time to invest. You're seeing companies who can still, as we mentioned, find those growth channels for which they can't get investors to come in to take advantage of these opportunities, and their valuations are in a much better place in the story. So yeah, I think so. Those are some key findings. I mean, post the world, we're hopefully seeing some more stability, right?
Mm-hmm.
Eventually, we learn from it, hopefully, right? As we've done in past crises before. It's hard to predict any sort of pandemic. And then I ask myself, from a financial perspective, and I look at fintech, is there any pandemic that could really affect fintech as a whole that would cause a cease to this industry to stop completely? I think if that would be a very scary world at that point, because here we have a certain world for which it continued to move forward during these times. I mean, one of the reasons we were able to remain so safe and healthy was to social distance, right? And we can social distance because we could still trade, and the mechanisms
Exactly.
were still there. So anyway, so post-COVID, I guess that's the optimism in me, hoping that we'll learn from this, and we'll be, hopefully we'll be, markets and valuations for companies. A crash was supposedly on the horizon, so hopefully we've corrected for that going forward.
Mm-hmm, mm-hmm. And so in terms of competitive positioning, obviously you are very, I won't say pro fintech, but you know that ecosystem extremely, extremely well. So do you see the crisis having been a positive for fintech, a positive for incumbents? What do you think is the resetting of this competitive positioning?
I mean, big picture, I think it's been well. So if we look at it, Kel, we'll focus on our portfolio of companies, right? So, we've still seen about $7.5 million in money raised since February. And
Mm-hmm.
this was either funding rounds that were kicking off proper seeds, or bridge rounds, knowing that there's probably going to be some delay, which is good. We're a seed stage investor, right? And then we have 18 active investments, so we consider that a plus. We still saw some growth options that were occurring as well during this. So in terms of sales channels and sales uplift for our portfolio companies, but it really depends, right? Like that would, I can't say that's across the board. Like there are certainly financial institutions that if you were, supporting industries in the travel tourism space, right? Like no matter what you are doing, you're gonna be feeling it's gonna be hurting right now. It is a challenge for sure.
Uh, and if you put, I would say, your financial institution at, so what do you see these guys transforming into or not transforming into post-COVID?
I think the key term has always still been the acceleration of digital. So I think for them to operate online completely, that was a lot of learning and growing pains. And so we saw some things that were in their product roadmaps for which were maybe a couple years away are now, tomorrow or today, and we need to figure out how to adapt for it. We're seeing there was a closure we also felt temporarily from, what we call the corporate venture arms. And they're like, everyone, let's refocus. Let's see where the world's going over the last couple months to say, let's look at our existing investments and can we support them this way? But in the last couple of weeks, we started seeing renewed interest and a lot of interest around leveraging the corporate venture arms to be a source, to find the innovation, to learn about the innovation. And so now they're all, I feel like there's a scramble to go, wait a minute, what, like we shouldn't be shut down. We should be moving very quickly and aggressively to figure out how to solve for that. So again, it does depend. Like if we look at a lending segment, right? If I was lending again to small businesses who are focused on lending to the restaurant business, how do you underwrite this new line of work, especially because we don't even know where it's going, versus if I lended to consumers for which there's SERB payments, but there'll be a stoppage and there'll be a transition. So what's going to happen, versus lending to tech and those industries for which are doing well right now. So, you know, it's not, you know, I spoke to one of the lenders who's been at it. We have a very good partnership with Fairstone Financial, 100 years in this business, right? They've seen crisis every 10 years. They're not going to say they've seen something like this before, but what they would say is, you know, they've taken learnings and each time have been able to kind of understand how to adjust as you go through it. And I think experience right now is paying a lot.
You know, when you see disruption, dislocation every 10 years for like 40, 50 years, well, at some point, I'm not going to say it becomes the new normal, but you know, you know what to do. So now our last question, which is a bit more a Jeanne question. So what are the new habits, or what did you change during the crisis, and hopefully for the best?
We were already pretty digital. I think, so we've just gone 100% digital, right? Our team is working remote. So we would previously travel around the world, for instance. And so we're like, I can't do that, unfortunately. I can't go to these places and meet the founders and see them face to face. So we did webinar series, for instance, where we would go and we had a couple hundred startups participate in this tour. We went around digitally where we engaged our advisors and we spoke with them and had great conversations and got to know them that way. So shifting to digital, leveraging these digital channels. So we've been really now working more on our internal database. We've made partnerships with groups called Ivado. They're tied in with the academic groups out of like University of Montreal and others. So it's a data science group, partnerships with professors from McGill, and working more on how do we understand it and reach out digitally in this fashion. So leveraging more of a data science approach to it. So that's more on like the work professional side. I will say that I think now more than ever, it's just working crazy hours. I'm sure you're in the exact same boat. I think a lot of people are. You're either working really a lot or you're really bored, but I think those who are working really too hard. I think, you know, there's no breaks. I wake up, grab the coffee, I sit at my computer. Next thing I know, it's 4 o'clock. I'm like, I didn't eat lunch or breakfast, right? And I'm not sure if this is a healthy approach right now. I think, you know, life's a marathon. So hopefully we start to learn a little bit of balance. Hopefully we stop filling up the calendars with back-to-back Zooms. Like, why did that have to change as such? I think it did cause us to rethink in other ways of connecting. But on the other side, you know, we're definitely pushing the envelope. I think some of us, we've never been more productive on these time periods. And I'm definitely starting to feel that.
Well, and it's interesting what you're saying in terms of productivity, because that's probably one of the things most people are telling me, regardless they work in large financial institutions, small outlet, everyone has been working non-stop. And most people say exactly what you say. Well, I'm skipping my breakfast, my lunch, and I blink and it's 6 p.m. and I'm not necessarily feel that I have accomplished a lot either, you know, so it doesn't feel good. You know, it's not like, okay, my day's finished and yeah, I did good. So I hope people are going to take vacation during the summer, even if they're not going anywhere. And that, to your point, a bit more mindfulness and a bit more, you know, reducing of anxiety and work. I don't know how it is in France. Maybe no one has that type of stress. Maybe it's very North American. I don't know. I should start questioning my family in Europe. But for sure, that's something that I agree with you has been very negative, actually, that new things. But thank you so much for your thoughts, and thank you for coming with you know, your visual. That was absolutely amazing. You're raising the bar for the people who are coming now. But thank you so much. It was really lovely to have you with us today.
It's a real pleasure, Peggy. You've been an absolute huge support to me and, you know, Holt through the years. So if anything I can do to join anything that you're working on, always happy to be a part of it. Thanks so much, Peggy.
Thank you so much. Have a great day. Thank you.
Bye.